The three biggest challenges that I'm facing today are regulation, both in the United States and Europe, the lack of access to clearing services. We've seen a shrinking number of firms that will actually clear business on our exchange. And the last one is consolidation in the industry. So the industry is getting larger and our customers are getting larger, but that means a less diverse pool of participants. So those are the three challenges that I'm most concerned with. We've seen growth year over year and lately month over month. So where we were regularly trading 1 to 2,000, now we're trading 3 to 4,000. But there is a hedging need, and it's growing. It was interesting. We launched a contract into a greenfield market where we knew that people were using the FANG stocks as a proxy to larger indices, but there was no specific hedging instrument for them to do this risk management. On a time horizon, it takes 5 years for a contract to get up to the point where it needs to be, and that's historically for MSCI. Probably way back in the 1800s for cotton, but we're seeing this market grow, and it's very exciting to have been there at the creation and see it where it is right now, which is in its teenage years. The impact of zero or low rates on trading, it impacts our clearing members. So our clearing members can't make the money that they used to in high interest rates. That in turn means that they have to find the most profitable clients to clear for. That in turn leads to the lack of clearing services for some of our participants. Those participants happen to be a lot of times commercial firms that are taking positions out in the future. A futures market to be healthy needs participants to take and do risk management way out into the future, out the curve. And it's harder for those participants to find clearing services because of the low interest rates. It's hard to say what the overall impact is. It's a lot of times we don't see it for a couple months to even a couple years out. If we go to negative interest rates, that's unprecedented. It's almost impossible for me to predict what's going to happen. So our customers are using data much differently. In the old days, you had a lot of traders who would use gut instinct to trade. They would trade on weather bets. They would look around and just make this gut instinct. The new generation of traders uses a lot more data, and they have to justify their trading decisions to other participants, whether it's their investors or their managers at these firms. So that means they consume a lot more data. From our standpoint, we've been offering a lot more data. So if you think about it, we used to offer, the concept of maybe a coffee straw worth of data. That pipe was very, very small. Now we do like a milkshake straw. It's this massive pipe of data. And we do that at a very reasonable cost. So, people are making much smarter trading decisions, which is better for my market, because they're using data and to make really logical decisions about how they trade. I think the CFTC's agenda and his speech were very interesting. He has set a very aggressive agenda, especially when you see that he has roughly about 10 months to get all of these priorities done. But he has a very aggressive agenda that involves one that's taken over a decade, position limits, and then a lot of other rules that he wants to do concurrently. It's going to be interesting to see if he gets all of this out the door. I wish him the best to do that.
This has been a production from John Lothian News.